All right, everybody, this is Jeff Scott. I hope you're having a wonderful weekend. We're sort of battened up the hatches here in South Florida and waiting to see if we get a little hurricane. I think the key word is little. Been here long enough that not too worried about it, but you still bring in your stuff from outside and try and avoid flying objects. Nice thing about Florida is after some big hurricanes in the past, the houses are built to withstand a category 4 to 5. And we've been through several since we've been here. The only thing you do is you lose power. So now we have a generator, which is why I bought Generac and talked about it when it was 100. We'll talk about that tonight. So my question, are the markets on the verge of a breakout or a fake out? And by the time it's posted, it'll be Sunday, August 2nd. My name is Jeffrey Scott. My email address is hgsidoc@gmail.com. I welcome comments, questions, etc. If you are watching this on YouTube, please click on the subscribe button, and that way you'll get notice of future videos. If you like this, hit the up thumb, I guess is what it is. And if you like it or not, just be honest and fair. Write comments, because sometimes that gets other people. I spend a lot of time doing this. I obviously don't do this as a business. I don't charge anything for it, but it does feel good when I see people are getting something out of it. And based upon some of the emails, I know people are actually making money from it, which is even better. This is for educational purposes only. Any recommendations in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. No one pays me anything in the trading world. And I paid for all the tools that I demonstrate, and trading involves risk, and you and your loan are solely responsible for any investment decisions you make. I've had lots of influences on my trading. I started with CanSlim, although what I do today probably doesn't look a lot like the CanSlim that folks like the Palatuma board use. A lot of the basics are there, but I've got my own things I do. I learned from Morales and Catcher about pocket pivots, Bible gap ups, etc. Ian Woodward, who took CanSlim to the computer with George Roberts and really taught me how to become a stock picker. John Person, who recently we put his indicators as an add-on for HGSI, great friend, trader, developer of tools, author, manages money, all-around great guy. Went from building a list to how to actually make money. Van Tharp, the king of position size and money management. And then a couple of others. Cigar, I think people have realized that superior profit is a great asset. So many people that follow me have started following Sagar, and many of them have picked up his packages. I wish it was an HGSI. We've talked about it, and I continue to talk about it with George. Speaking of George, fond memories of George Lee, who recently passed away, great trader. Mark Minervini, sort of the applied trading, who's taken what he's learned, has changed things, became his own guru, and I'll probably be doing his meeting again this year, although it's online. And then last weekend, I spent the day with Roy Kelly, who's got some interesting ideas and tools as well. I own a lot of stuff, but I don't use everything. If I have TradeStation and Thinkorswim with my indicator packages, I'm great during the day. I use HGSI and EdgeRater at night to help me manipulate the data and sort of the data science of finding the best stocks. The Q tools from Sagar, I use them a lot, and I'll show you during this 45 minutes to an hour how I use them. Dr. K now has his stuff for TradeStation. I'll send out a link to the webinar that he gave this week. I'm never paid by any vendor when you buy something that I suggest or use. Any affiliate fee offered to me is passed to the purchaser as a discount. The website for HGSI is here, free 30-day trial, hundreds of movies under investing strategies. Where are we in this market? Gosh, who thought a week ago that we were about to take another leg up? Well, we knew that there was seasonal uncertainty, but we also knew we had big tech earnings. And we had a good week, at least if you're the SP or the NASDAQ. Are we about to roll over into August? or new highs going to be the target? And I'm mixed on it, and we'll talk about it over this hour of my thoughts. So I'm all over the place. I'm still net long. I went into the weekend with a little bit of protection, contras or options on contras, cheap things that would just help me if the market goes way against me. I'm long Apple, I'm long Facebook and Amazon, which made a big difference this week. But I'm starting to trim positions as I've been talking about. If you look at Friday, Friday felt like a great day. It was another six-figure day on my account. And I look at it, and there's certainly pockets of strength, staples, technology, but not consumer discretionary. Healthcare, a lot of green, but a lot of red too. So it was a mixed day. Oh, my goodness, I forgot to put these in here. So let's just go look at them in real life. So if we go down here, this is daily charts of the futures in Thinkorswim. Maximize, sell. So we had a new buy signal come in on Thursday, even before the earnings came in that night. Disappointing day on Friday, considering the three titans were up so much. Google was down a bit, but that's a bullish pattern. We are still in a strong uptrend on the NASDAQ. Excuse me, on the E-minis, my bad. Still in a strong uptrend on the E-minis. Now, we have not taken out the prior highs at 33.9750. And frankly, I think that's not an unreasonable expectation to come. If I just looked at this in the NASDAQ, I would think we're going to go hit new highs. Now, you'll hear the reasons later why we may not do that this run. But the E-minis, strong as can be. The 50's now crossed above the 200. Price is above the 17. What a bullish looking pattern. Talk about bullish pattern. The NASDAQ, big run off the March 23 bottoms. Here's its recent high. I think it too is in position to threaten all-time highs. New buy signal came in on Thursday. And as I said before about the S&P, it was disappointing to see only a modest gain on Friday, modest 1.11%, despite knockout earnings on some of the big titans of tech. Look at the Dow. It's not bad, okay? It's not horrible. You're still above the 200. You had a couple of top or bottoming tail days here. The 17's above the 200. You're about to get a golden cross of the 50 over the 200, but it's not in the same trend as the NASDAQ and the S&P, and you're a long ways, not only from the June highs, but from the February highs as well. So not bearish per se, and maybe it's a nice little wedge that'll break out to the upside, but not nearly as bullish as the others. And speaking of not nearly as bullish, the same thing can be said about the Russell 2000 futures, and this is IWM, so let's make these futures WRTY. Kind of looks the same, doesn't it? Going sideways, but again, 17 crossing over the 200, 50 getting close, price above the 200. So not horrible, but certainly lagging the NASDAQ and the S&P 500. The VIX is sort of resting on the 200. And if you look at where the VIX is today and you look back to the left, it's still elevated from where it was resting of most recent times. If the VIX was going to bounce, now it's going to bounce as it's sitting on the 200-day. And dollar weakness has certainly made a big difference in my portfolios. I have a lot of gold and gold stocks. And you can see a reversal day on the dollar with a bullish engulfing pattern. So that's something to watch, especially if you're like me and you're heavy in the metals. But the metals still look good. E-minis again. So on a daily basis, I've got to say the markets look pretty good. If I go to the weeklies on the futures, it may be futures, it may be cash. Let's see. Futures. I'm not going to spend a whole lot. As you can see, we've not taken out the prior highs on the S&P 500. We are very close to highs of a couple weeks ago on the NASDAQ, nowhere close on the Dow or the Russell. All of them are in short-term uptrends. The VIX resting at an elevated level, and the dollar really has broken down. Let's go back into the PowerPoint. So I guess I'm going to take that out and take that slide out. Won't look like I'm missing anything. Let's look at what's underneath the averages. Rates continue to be horrible. You can see, in a second, you'll see that on the 10 years, it actually dropped to historic lows. On the 30 years, it dropped as well, but did not take out the prior lows. Does that mean the curve is widening? I don't know that, but I do know that everything's cheap. I'm buying or building a house in Santa Fe, a mountain home to escape to during hurricane season. And I was going to pay cash, but rates are so low. And if you think about it, low rates should be good for REITs, MLPs, utilities, dividend payers, and home builders. You got to have market utilization of energy to support the MLPs, and people have to be paying rent to support the REITs. And utilities maybe are getting ready. So there's a lot of confounding things in the market, but low rates are not great for banks. Now, AD lines, if you look at the small stocks on the left and the big stocks on the right, and the AD line is the white line, the orange or red line are the corresponding IWB on the 1,000, IWM on the 2,000. Notice that the big stocks have already taken out their prior all-time high on AD lines. And notice how the indexes are almost back to their all-time highs. Small stocks are lagging. If we look at the NYSE, it actually turned down the AD line this week. Make sure that's a weekly. Led higher, no surprise, by the Qs and the S&P 500s. And some of them, like the diamonds, actually turned down on the AD line. I do want to point out that in red, that the transports have been moving. And the transports, if they can break out, will be a reason to think this market might go higher. Breadth is okay. Here's stocks above the 200-day moving average, stocks above the 40, really didn't change much. And the one that I was concerned about, which was stocks that were in the 3-month new high, new low ratio, where it was 100% new highs. The last 2 weeks, they've been sitting down here, not much change, but that took some of the pressure off the system. The daily McClellan, we look for extreme readings, we look for divergences and zero-line rejects. We have none of those here on the daily or the weekly, so I don't see a signal. Now, a little bit else about the market. I'm a growth guy, all right? On the left, I took what's called a warehouse view, looking at the markets a week ago, and then said using that fundamentals, how did the stocks do this week? So the first thing you notice is this pattern here. So this is looking at ERG and how much return. If you're a growth stock investor, and we always ignore the tail and the head because the number of stocks there are very small, you want to see by the time you get to that third dot, you love it if you're a growth guy when you see that this type of a pattern, because that means the higher the ERG, the better the performance. Now, what is ERG? ERG is a combination EPS rank plus relative strength rank plus group rank. So growth led, and you could see here, higher the EPS rank, the better the return. Higher relative strength, the better the return. Group rank, the better groups all performed well. Accumulating stocks outperformed distributing stocks. That's good to see. Boxes for another time. Then I looked at the individual watch groups I put together and some indexes to give me a sense of what was working. So let me point out some real good ones. The S&P 500 was up 1.73% close on Friday to close on Friday. That's a damn good week, excuse my French. But the IBD 50 was up 3.17%. That's an amazing week. Boy, was growth in play. The Market Smith 250 was up 3.63. The RS line blue dot for Market Smith was up 4.93, although only 50-50 were winners. The reason why I had such a good week is my holdings were up 5%, a little bit more than 2-to-1 winners to losers. The buy watch, which I reviewed with you last week, was up 6.22%. So it was the weekend review in IBD was up 3.38. So it was a great week to be trading growth. I'm not going to go back and describe how I get the boxes, but this is something that Ian taught us of looking at stocks with growth in both earnings and revenue and how they perform off bottoms. And these are stocks who would have been picked on March 23rd. And you could see that where the S&P's been up 46%, any stock that is in a box, or frankly, any stock with ERG over 240 has outperformed the S&P 500. And one of them is up 145%. Now, I know a lot of people like me have had huge returns off that March 23rd low. And several of the stocks in those boxes are in my portfolio. The buckets, I look at sort of how overbought or oversold the market is by looking at the distribution of the stocks in the S&P 1500 within their Bollinger Bands. The midline of the Bollinger Bands is the 50% line, and I could see in green here that 62% of the stocks are above the midline of their Bollinger Bands. That's bullish but not excessive. I see about 7% are above their bands and 4% are below their bands. So this is a little bit of shift to the bullish side, certainly not extended. I would not expect a Hindenburg omen to occur for some time, or at least until we get new highs. We don't see one. Market tone is still pretty much bullish and actually improved as the week went on. And you could see on Friday, we had a couple of kahunas in the NASDAQ to start with. Now, here's where it gets a little bit more dirty. This is my favorite snapshot of the market. It's done in real time every day on one of my monitors, wherever I'm at. And what it tells me in real time is how many sectors are up versus down and which are they. This gives me in purple the current day, blue yesterday, and in red 5-day performance. So I could see over the last 5 days there's been a deterioration in breadth here, where we had 7 sectors positive 5 days ago, but the last 2 days we've only had 2. Down here I can look at 5 days or 1 week, 2 weeks, or 4 weeks, and I could see that a month ago we had 9 that were positive. So clearly the sector strength has slowly been weakening. Now here is an AD line at 1, 2, and 5 days. I mentioned this in one of my webinars, wouldn't it be nice to have? And then a week later I had it. Sager's great. And this shows you that 5 days ago, 2/3 of the industry group, of the sectors were positive, but now we have 82% are negative. If we look at the industry groups, you see that almost 75% or so of the industry groups are heading down, and of the stocks, 2/3 of the stocks. So to me, that's narrowing breadth of winners, despite the fact that the indexes in my portfolio are doing well. Canaries in the coal mine. Like the canaries, my portfolio got killed over the last 2 weeks. I probably peaked here, and I came back pretty hard with the canaries, despite the protection I had in the market. But the canaries are back. They're not back to all-time highs, but they're moving up. Now, know your news and earnings dates. This is a big week. Non-farm payrolls, unemployment rate, and earnings on Friday. Initial jobless claims on Thursday. Some manufacturing and PMI on Wednesday. It's a busy, busy week. Now, want to hear busy? Look at over on the right-hand side. All right, I own Chegg. I got to decide what to do with Chegg. I've got big profits in it. I'll probably sell half. What else do I own right now that's here? I own some Twilio, so I've got profits in it. I'll have to decide. Just going through the list here. Hgsi, I have to look at that one. But I'm looking at this on a daily basis, Datadog. So a lot of big earnings this week and earnings in stocks that I have. So as I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. In fact, if I was to die tomorrow, I'd like my wife to put that quote on my tombstone because it changed my life when I started realizing when earnings dates were and I stopped blowing up accounts. Thoughts, market was up. SP was up 0.8 on Friday and closed at session highs amid a 10.5% gain in Apple, 40 points in Apple. 8% gain in Facebook, 19.17, and 4% gain in Amazon, 112 points, following their impressive quarterly results. The S&P 500 rose 1.7%, and the NASDAQ rose 3.7% in a busy week that concluded with stellar mega cap earnings results. Now, despite that on the week, the Dow and the Russell both were fractionally lower on the week. If you want to climb a worry, let's climb a wall of worry. We got August headwinds. We got that weakening participation. We got COVID riling up the politics. We have riots in Portland and other cities. We have Congress arguing about further relief. And the Biden v. Trump train has started rolling and should be taking center stage. So I could list a long reasons why the market should go down. Yet, we'll look at transports. Well, as they approach highs, big tech blows out earnings. I'm finding a lot of my favorite, really good stock patterns. So I have to ask my question, if it looks this good underneath, are we really getting close to a blow up, to breaking down? I don't know. I think I'm going to be leaning to the upside, but I'm still leery. I'm up, as I said, 100% on my model. That's real money. I have positions in Amazon, Apple, and Facebook, so I had a good day on Friday in the week. Still net long, but I've nibbled on protection. And we still have some big earnings coming out this week, so make sure you're paying attention. Speaking of my favorite stock patterns, I make money every day when I trade this pattern. I'm just going to review the pattern with you before we look at current action. This is Goldfields. We looked at it on a webinar. This is the pattern that I like. Stock was in an uptrend, pull back to the 50, mobile breakout from a squeeze, a couple of kahunas, in a person buy signal. I go long in this pattern. I went long at 8 with a lot. I bought 150 contracts of calls, and I sold 150 puts and then bought protective puts. This has been a big win for me. Neogenomics, uptrend, long squeeze. Look how long the squeeze was. Well, which squeeze do you actually take and buy? Well, you probably had some fits there and stopped out, which I did. But I took this one. Why? I took it on this day because it broke through the chandelier top, mobile breakout from a squeeze, a eureka in the market, which is the screen color here saying the market's turned around, and a bunch of kahunas. Hgsi, I gave this one here because I know my favorite neighbor bought it. Why did I give it? We're in an uptrend. We pulled back to the 50. Mobile breakout from a squeeze. Person buy. Pocket pivots. Kahunas. What's not to like? And it's had a nice jump as well. Stamps.com. I think she sold this one. Why did I like it? Well, you tell me. Pull back to the 50. Mobile breakouts from a squeeze. Person buy signal turned positive. Same time we had a pocket pivot. And kahunas. Lots to like in this area, and the stock has responded. Co-diagnostics, gift that keeps on giving. Why would I say that? Well, gave a buy signal where my arrow was here. It's kind of nasty looking, big run up, pull back. It's a COVID stock. Mobile breakout from a squeeze off the 50 with pocket pivot and a kahuna. Gave you another buy signal. I got back in on this one. Again, mobile breakout from a squeeze, pocket pivot from a kahuna, and a person buy signal. So I'm a simple man. All right, I want that pattern. Uptrend, pullback, breakout. Uptrend, pullback, breakout. So let's look at some charts. Now, for those that don't know me and don't know that I tell the truth, if somebody tells you're up 100% on the year, you should be rolling your eyes. Yeah, right. Well, I started the year after I paid my taxes with $1.4 million in this account. I am up P&L year to date, $1.4 million. It's been a good year. Now, you're probably going to see that number change a lot. Not P&L, but my total balance, because I'm taking out money for buying that house. So it's been a great year, and hopefully it goes further. So let's see where we are in my trade station indicators. So I look at very simple things here. I look at 6 things that give me a sense of the market and trade station. Number 1, am I in a person buy with the green arrow or sell with the red arrow? Buy, weekly buy, monthly buy. That's good. What's the color of my paint bar? That looks green. When it's green, I should be long or holding. I should not be short. When it's blue, I could go either way. When it's red, I should be short or holding. I shouldn't be entering new long positions. These red dots on the top represent MACD divergence. How do I know that? Because notice this high here is higher. MACD, MACD, lower MACD histogram, you have a bearish divergence there. Where am I within the envelope? This is pretty tight right here and midway, so there's no signal there. It doesn't like to spend a lot of time underneath. So when I see that, I know it's going to bounce. My weekly bongo, which is the middle green, is green, which is great. And then this is my old high jump. It says 86%, so it's not overextended. And we'll talk more about that later. Let me just add my new high jump to these slides, to these charts. Everything in work is slides. Everything is a Zoom meeting and PowerPoints. Craziness. Oh, and I just got to figure out where I put this. Somewhere in here. Yes, I have a lot of indicators, most of which I don't use. All right, so this came to me from one of my friends and so it shows me that I'm nowhere close to the 95th percentile on the high jump, so it's not overly extended. I'm going to be retiring this one. Notice the pattern's exactly the same. This one ran from a 0 to 100. I'm running it from minus 100 to plus 100, so we'll take that one out soon. So E-minis, what's not to like on the E-minis? Dow futures. Red, sell signal. Weekly and monthly are buys. Weekly bongo's green. High jump's not an issue. That's bothersome, so that's still in a sell signal. That tempers me a little bit. NASDAQ. Oh yeah, buy signal on Thursday. Weekly and monthly buys. Green bars there. Green here, not quite to the top of the high jump. NASDAQ still looks attractive. Russell. No. Well, it did have a buy signal come in. I take that back on daily, weekly, monthly. Blue bars, so it's more of a hold than a buy, and the weekly bond goes green. So I look at this, and I see more strength in the SP and NASDAQ, but I already told you that. We can look at the VIX. Notice these green dots? These green dots are suggesting a bullish MACD. Why? It's got a lower low than it did back here. Look at the MACD. That's potentially predicting a reversal with a bullish convergence on the MACD. So that's interesting. A higher VIX is not so good for the markets. If I go into Hgsi, get a quick drink of water. I'm going to show you a couple of new things today. Not on how I trade, but some new improvements in Hgsi. First thing here, don't ask me about it because it just popped up on a beta I was looking at and George didn't even warn me. User smart groups. There's been a lot of discussion over the years. Let's create our own smart groups that would run automatically every time you run it. It shouldn't be that difficult. It's a smart group's a view. It's a combination of a filter and a combo, and then you just have to tell how many stocks you want it to list. So that would be awesome. That would make some of the things that we do much easier. Because right now there's a ton of smart groups, and I'll talk about those for a second. But even though we have a ton of smart groups, you can't modify them. So I have a number that I like big volumes, all right? Or maybe I'm going to look at a pullback to the 50 with a kahuna. So in fact, see anything here that might suggest interest that I have? Absolutely. Uptrend, pullback to the 50, New John Person buy signal, pocket pivot and kahuna. It's just missing the squeeze. If it just goes sideways for a couple days, it'll get that. But I like YY for that reason. The reason why I have a smart group is to help me quickly find stocks that might be interesting. I think this one, I don't know if this is a buyout or not, Adapt Immune, but big move up, sideways move, it's in a squeeze, a kahuna, John's fired, breaking above the 50, another pattern that looks interesting. We will come back to that pattern. So I like to start with the market analysis groups. As I said, I got some things to show you tonight that are new. Major Markets Plus. So I don't want that one. I want to go top-down view. So one thing I can do is I can go into Edit View. I'm going to hit High for high jump. I'm going to look for the high-low oscillator, which you don't have yet. I've got a beta version I'm still working on, make sure it's fine. Oh, where is that high-low oscillator? Maybe I should call it high. Well, I'll be darned, I didn't put it in here yet. Well, it must be here. High jump. Well, it's in my other machine. I must not have loaded it yet. All right, I'm going to stop this call for a second, and I'm going to load up that file. All right, that was my update. It took about four and a half minutes. As you can see here, it says, it was probably here already. I probably was looking in the wrong place. Percent high-low oscillator. I want to bring that over. For those that have the person stuff, I'm not sure if it'll be a big value or not, but I've been using moving average slopes for a long time. So now we can look at slope of market catcher. And this will give us a sense, I believe, of what relative strength is doing. And I'm going to try and build some scans this weekend, looking at this and trying to see if we can't find bullish convergence and bearish divergence. So I just put high-low jump there. Let's bring it up to the top. I'm going to put it right 50 DMA volume. Let's go up to day. All right. So now, when I look at a warehouse view, just got to figure out where I put it. Here it is, high-low jump oscillator. It tells you where you are from from minus 100 to a plus 100. So you can certainly tell when something is extended. I can now scan for things within HGSI that are extended to the upside or downside. Very exciting, at least for me. All right, tighten this up. So the top-down view, I rank the indexes, and these are some major ETFs and indices. And what does it tell me? It tells me that leading was gold for the last 1 day and 5 days and 3 weeks, heavily weighted for 1 day. NASDAQ has been strong, no shocker there. NASDAQ 100, IBD 50. What's down on the bottom? Biotech. Interesting with biotech is really underperforming despite the NASDAQ being strong. The VIX has been down. Semis also underperformed, at least on Friday. The Russell's down here as well. So let's quickly go through some of my favorite indexes. And then let me see what I want to try something here. Oh, perfect. This is a new computer, and it's my first time I've actually been using HGSI on it. I sold a bunch of computers to you guys over the last month, and then I went out and bought a bunch of new things. Yep, this has got my oscillator. Is this the high jump bar? I think this is, yeah, this is the new high jump. And the midline here is 0. So you get low jump with green candle lows that occurred on the bottom. You get high jump with red candle highs. So let's look first at the S&P 500. So we had a mobile breakout from a squeeze. We're in a person buy signal. We've had a beautiful up move off the bottom. In fact, if I wanted to measure that, I could just touch it to the low here and bring it up to where it closed. We've had almost a 50% move in 49 days. That's a big move. We've taken out the previous reaction high here. We are short. We're still below this high, which is where this line is. But it would not surprise me to see us go out and test that. I think the bear case would be to break down, and perhaps the most likely thing will be to take its time before it gets there, but go sideways. But you're above the 17, the 50, and the 200. Remember, this is the cash index now, not the futures. So it's hard for me to say that the S&P is weak. If I go and look at the Dow Jones Industrial Average, it's struggling here at the 200, but it's been consolidating. It's in a squeeze. It's got bottoming tails, not as strong, not weak. Perhaps it's setting itself up for a breakout. I mean, I'm not the world's best drawer. I'm just warning you, but one could argue, you know what, let me make that darker and thicker. We're going to break one way, and why not break up? We can look at the NASDAQ, the strongest of the bunch, and a leader. Look at the move it had on Friday. Broke back above its moving averages, closed at the high of the day, mobile breakup from a squeeze. A new person buy on Thursday, pocket pivots and kahunas. I can't short that or say that that's weak. It still looks strong. And what about the Russell 2000? A lot like the Dow, isn't it? May trade sideways and then break out. Hard for me to be overly bearish here. Could it go down further? Absolutely. Could the market collapse on Monday because of news? Absolutely. But if I was a betting man, I think the market's going higher. I'm prepared for it to go lower. Part of my bullishness, look at transports. Transports have now broken out above the moving averages. Clearly have a long ways to go to get back to prior highs. But look at this move in the transports. take a look at some of the trains. CSX, KSU. Well, let's look at CSX. Looks like it's ready to run. Let's look at KSU. Breaking out. Let's look at UPS. Off to the moon. So strong transports is a very, very bullish thing. What about the IBD 50 index, the ETF? Looks like the NASDAQ. What about the IBD momentum? This was up while the IBD 50 was lagging. They both look good. Let's take a look at the US dollar. As you could see, it had a reversal day on Friday. This gray bar here is the bingo, and that's sort of the baby out with the bathwater. So maybe we're going to start to rally here. I'll wait and see before I close out my gold positions. We'll look at gold in a second. Let's take a quick look at the VIX. And as we talked about before, it's rocking around down around the 200, still well above its prior resting zone. This is the volatility index, but not the future. Now let's look at the star, gold. Wow. Look at gold. Now, you don't think I was buying gold here? You don't think you had another buying opportunity here? I've been long gold for a while. I'm long GLD. I also have ABX, which is gold, and I have GFI, which we'll see again. So gold looks good. What about silver? Yep. And what about gold miners, which have been lagging for quite some time? Gold miners look good as well. So the metals look good. What about oil? No. I don't know. I'm not going to say no, but it's a laggard. Semiconductors had some good numbers. Still look good. It's just a one-day negative day. I don't think people figured out the impact of all the people buying computers for Zoom. AMD, for example, just went crazy. And biotech, not so good. Maybe it's going to give us a buying opportunity off of here, but I need to see it at least have an up day before that would happen. So market, I think it goes higher, but I think we have risk, and the risk is mostly the news side. So it's markets versus news with an accommodating Fed and big employment numbers on Friday. Industry groups, we have 175. If I look at two-day force, I can see that I've got 33 to the upside. If I look at two-day force down, I have, whoops, one too many. Huh. Oh. Here it is. Let me go into a different grouping that I know works. Two-day force down, I've got 25. So 25 down, I think it was 33 up. So short term, a little bit bullish. But if I look at 5-day down, 5-day up is 43 and 5-day down is 58. So you sort of got a flat market, a little bit bullish short term, a little bit bearish intermediate term. When I look at the things that are down and I see biotech, specialty pharma, automobiles, oils, pharma, casinos, airlines, renewable energy, steel and bank, those are some of the things, these are 5-day down, that are where I usually buy from. So that's worrisome. 2-day down, biotech, pharma, casinos, and gaming. Look at biotech. I think Vertex is a potential short. And in fact, it's on my potential short list. Why do I think it's a potential short? The bongo's gone red, the weekly bongo. I'm not looking at the daily anymore. It broke down below the 50-day moving average, failed to get back up here. So that's an ISO failure. It's breaking down on the weekly. The relative strength has deteriorated compared to the S&P 500. It's got a person sell signal and a pocket pivot to the downside on volume. All right. So Vertex is one that I might look at for potentially shorting. Specialty Pharma. This is a one that had a big run up. There's been a lot of fraud with the CEO. I've been to their offices. Nice guy. I'm not making any comment. He's been involved in some fraud charges. What was interesting is he also owns a brokerage firm, which is in the same building as his drug company. And a lot of reports on his own companies, which I thought was interesting. Big run up, rolled over here on Friday. Why did they run up? I think they ran up because they have a lab that was doing some COVID testing. So pull back there. I'm out of it. I also know the CEO well. This company, big run up, NatWest. They presented some interesting data in pancreas cancer. We're waiting to see a clinical trial data, but we haven't seen it. I think the market got tired and it sold off some. So these are areas that I usually am buying, not selling. So let's go up to the top, look at 2-day up, and let's look at some of these. Office electronics. Please tell me nobody bought this stock, or at least nobody's still holding it. Eastman Kodak. Talk about craziness. I want to point some things out. July 15th, volume 134,000 shares. July 21st, volume 107,000 shares. July 24th, 74,000 shares. July 28th, 284 million shares. When do we see this pattern happen? We see this pattern happen on news. So what is the news? Eastman Kodak, which has been basically in the toilet because they sort of screwed the pooch and held on to film-based camera supplies way too long, got a loan from the U.S. government of like 785, 95, something. Where's my $1 million to do development of compounds for generic drugs. I think the market cap when that happened was about $240 million, which was probably $200 million too high. The stock went crazy. I don't get it, because the reason why we have shortages of generic drugs is there's no pricing power and nobody can make any money on them. So explain to me how a company that no one cared about, no one traded, gets a loan for the government of $780–90 million to go into the business of making drugs that there's no pricing power, how all of a sudden that stock is worth going from $2 to $60. What market manipulation on fire. It's come down a lot. I wouldn't touch it. And I don't think there's anything here to be chasing up. My personal opinion, I have no inside knowledge. E-commerce discretionary. Well, I had a good day because of Amazon. It's interesting. It really has a lot of my favorite things with mobile breakouts from a squeeze and a pocket pivot and a kahuna. Interestingly, it didn't flip the John Person buy signal. The problem with Amazon is it's already had a big run up here, and it's now sitting kind of where it's peaked the last couple of times. A breakout above that line, I'd be a buyer. But right now, I'm going to see if it comes back a little more. I have a big position. I've got calls. I've sold some calls against it above that line. I also had a put at 3,000, which cost me a lot of money. That went to zero and hurt some of my gains on Friday, but I still made money on the position. I'm at an age where safety sometimes outweighs the excitement. And by the way, it has a tendency of shooting up on earnings and coming back down. So I'd also be aware about that as well. So Amazon, Jumanji, I think we talked about this. I know I looked at it last week. Broke out here, a little pullback. Hard to buy this thing. You can see it's up at the top of its high jump. But what an exciting little stock if you own it. Doesn't make any money. It's an online, probably Chinese company. It's an ADR. Here's one that's got my pattern. Uptrend, pull back, break above the chandelier stop, squeeze, pocket pivot, and a kahuna. I mean, a person buying a kahuna. This one looks interesting here. I would have no trouble buying that. Overstock, big run. Wayfair, too far gone. Hgsi broke out on Friday, but look at 3 kahunas in 5 days, 3 pocket pivots. In reality, it just broke out from the previous high. Hgsi, if it wasn't for earnings in 3 days, remember, I know the earnings dates, I might be interested in looking at that. Great earnings per share growth, big leader. Mercado Libre, the eBay of South America, too expensive for me. Chewy, another of my stocks. Sideways move back to the 50, mobile breakout from a squeeze, person indicator, pocket pivot, kahuna, and boom, it's running. I think Chewy can be bought here. If you already have it, neighbor, keep it. Netflix, kind of boring. JD.com, uptrend, sideways move, mobile breakout from a squeeze, pocket pivot. I think this is ready to jump. It's that same basic pattern we looked at in the beginning. Chegg, online notebooks. I have a position here. Earnings are on Monday, so I may dump it before the earnings. Took out its prior highs. This is what I want to see Amazon do. Broke out. That looks interesting, but it's expensive. And again, it's got earnings coming out. VIPs. Where have we seen this pattern before? Uptrend, sideways move, and a breakout. I like that one as well. Lot to like in the e-commerce. Internet media, Facebook. Uptrend, sideways move to the 50. And it was telling you on the day before earnings, Thursday during the day, that it was something to look at. Friday, big gap up, harder to chase from right here. I've got a nice size position there, so I'm a happy man. Soho. I looked at this last weekend. I don't remember if I told you guys or not. I think I did. I liked it because it was breaking out right here. Had a kahuna and a mobile breakout. It looked like it was ready to do something. Looked even better on the weekly rather, and boom, it broke out nicely. YY, I looked at it before. I like that. I'd probably make it get above where that line is before I took it, but I'd be watching that one. Probably gap up on Monday and won't give me a chance. Its earnings are in 2 weeks, so I'll be aware of that as well. Baidu, less interested. Hoya, another one, pull back, mobile breakup from a squeeze, kahuna, another Chinese gaming internet stock that looks interesting as well. So many interesting stocks. Can the market go down with so many good setups? Twilio, this is one that's a good holding stock. I wouldn't be buying it here. It does have earnings this week, so I may trim. Dario Health, have no idea what they do. Don't even care. All I know is a bunch of kahunas, person's indicator there, and on what looks like, what was the volume? 5 million shares that broke out on Friday. I want to do some research and see what the story is. Not saying to buy it. That's interesting. Anybody want to bet it's got something to do with COVID? DocuSign, been a great leader. Too far extended for my taste. I like 2U. Uptrend, sideways, and here you go. Mobile breakout from a squeeze, a person buy, a pocket pivot, and a kahuna. This looks interesting. TWOU. Education technology company. Adobe, uptrend pullback. Here's one you put on your watch list and you look for that kahuna to come in. Salesforce, exactly the same thing. Sideways, mobile breakout from a squeeze. I need momentum. I want to see my kahuna. Allscript is a healthcare technology play, And you had a big gap up. It must have been on earnings Friday. Semiconductor devices, Qualcomm, big gap up and gone. Probably too late to chase. AMD, oh my God, this was a beautiful thing. It gapped up because of Intel. Earnings are out. It's got great earnings per share growth, big multiple. I bet the multiple continues to go up. I like AMD. I am long AMD at this point. NVIDIA, I'm also long NVIDIA. I'm slowing down here. I bet this thing gets another leg up. Its earnings are August 19th, so that's the only issue. Skyworks, breaking out here. Mobile breakup from a squeeze, pocket pivot, kahuna, person buy signal. Broadcom, setting up, ready to break out. Maybe goes on Monday. Let it get above its PSAR dot. Mobile breakout from a squeeze, person buy, pocket pivot, kahuna. Do I sound like a broken record? Infi, sideways move, breakout on Friday, mobile breakout from a squeeze, pocket pivot, kahunas. There's a lot to like in these patterns. Internet-based services, Pinterest, too far gone, in my opinion. Trade desk, interesting place. Run up, sideways, mobile breakout from a squeeze, person buy signal on the 17, pocket pivot and kahuna. The only problem is earnings are August 6th. I like the pattern. I'm trying to, I may or may not. I don't love to go into before earnings. Avalara, this was one a couple weeks ago when it pulled back. A break above the chandelier here would be interesting. Just so many of these stocks look good. GoDaddy, pull back to the 200, so it's a deep pullback. Mobile breakout from a squeeze, pocket pivot, kahuna, a new person buy signal. Infrastructure software. I don't own this one. I wish I did. Maybe I should buy it now. It doesn't make any money. Fastly. What a beautiful move. And how would you have found this day? Mobile breakout from a squeeze, Bible gap up, person buy signal, and kahuna. I didn't pick it up, and I don't know why I didn't pick it up this day. I wish I would have. Probably because it was an IPO. Oaked has another one that looks like it's ready to go. Sideways move here. It had a big move on Thursday. Mobile breakout from a squeeze, pocket pivot, kahuna, person buy signal. I have a position on this one. It actually was up. You know, I laugh. It's a red candle high, which is a bearish candle on Friday. It was still up over $1. So it had a little bit of a bottoming tail there. I mean, I could go on and on and on and on and on, which is precious metals. Newmont, a lot of them look like this. You have a cup, a handle, sort of a short handle, and a breakout. Newmont, mobile breakout, pocket pivot, kahuna, person buy. Is it ready to go? You need gold prices to be supportive. You need the dollar to not gap up. But it could. Kirkland, similar pattern, already broken out. Barracks is one of the ones I own. And I showed you GFI earlier as one of the patterns I like. And you could see from $8 where I got into it, it's ran all the way up to 14. All right. I did create a list of potential shorts. I'm not that interested in going short this market. It's hard to short as we get close to all-time highs before we have a clear rollover. But I will be watching these stocks. Stocks like Visa, who broke down below their 50 here. Mobo, breakdown, squeeze, weekly bongo, person, sell signal, pocket pivots down, and kahuna's down. Or it's the same exact pattern, it's just to the downside. Caterpillar looked better on TradeStation. I'm not going to talk about that. Ecolab broke down below the 200. This thing could go all the way down to 150. So there's a number of things that look weak to me. I always like to show you the stocks that I found attractive this week on my top-down review. And here's the buy watch. And let me do a couple things here. Please remember this is for educational purposes only. Nobody can buy all these stocks, including me. I have no intention of buying all these stocks, but I know on Monday morning, this is what I'm going to be looking at for things I might want to buy. If we look at industry groups, we spent some time looking at that application software. Well, let's look at Criteo as an advertising stock. Just broke above the 200, mobile breakout from the squeeze. Industry group looks okay. It's got a high close doji on the weekly, allegedly, and on the daily. Person buy, pocket pivot, and kahuna. And you could set your stop probably right below the prior day low. That looks interesting if you want to buy something off the bottom. Then we had a number of those application software companies that we looked at. C is one I own. Sideways move, just need to see momentum. Side play is pulled back to the 50. It needs to see momentum, but it's something I want to follow. Zoom, is it getting ready? Well, here's your pullback. It just needs to see some kahuna action and a breakout. So I'm just creating a list. Zynga is a cheap one. Pullback, just need to see some momentum. Maybe here, take out the chandelier. Apple, Maxar, Supermicro. A lot of these stocks we've already looked at. See if there's anything else. CMVLT. Did I like that one for a reason? Yeah, it's all right. Generac. It's back. I gave it to you back here at $100. I had a couple of you say thank you. I appreciate that. I hope you still got it, because if you got it, you're up $50 a share in 3 months' time. And I love my Generac generator, especially when we have a hurricane that's going to hit in the morning, which is why I'm going to try and get this out tonight, because I can't guarantee I'll have internet access. I'm sure I will, though. What else looked interesting here? Match Group had the buy signal come in here. Not sure it's going to keep going, but it's one I want to at least watch. And I'm going to talk about what that means in a second. So most of the stocks we talked about are here, a few others as well. Talk about the perfect setup. T-Mobile. I'm not talking about the perfect company. I don't understand the merger. I don't like their earnings. What I do like is big uptrend, sideways move. It's been in a squeeze forever. And today it had, on Friday, a mobile breakout, person buy signal, a pocket pivot, and a kahuna. That stock looks like it's going higher. Beautiful pattern. And that looks just like the ones I showed you in the beginning. On that note, I'm getting tired, so I think I'm going to say goodbye. Yeah, I want to show you one more. Rambus. It's another one that I thought had a really nice pattern. It pulled back a little farther than I like, almost down to 200, so it's got some resistance potential here. But a pocket pivot, a kahuna, person buy in the squeeze. So that's going to be on my buy watch list. And just to review, what does my buy watch list means? It means in my mind, I've got some of these that I want to buy. I've shown you some of those today. I am going to probably have 1 or 2 conditional orders at the market open. I'm going to put them all into my TradeStation list. And then I also include some other stocks as well. And then I'll sit there during the day, if I have time, and I'll look for stocks that give me signals. Those are bounces. There were no breakouts. How about box signals? How about headwinds, bearish headwinds? How about go with flow entries? How about reversals? And I will look for signals to pop up. Those are some of the Q things. I will look at my signals, high close, low close dojis, green candle lows, red candle highs, pocket pivots up, pocket pivots down. I will look at Bible gap ups, of which we had a whole bunch of them on Friday. I'll look at when their earnings are. For some reason, they haven't populated in a while. have to figure out why that thing's not populating. I may need to update a DLL because they should have populated. And then I've got John Person's indicators. If you don't have TradeStation, I have Thinkorswim, where I do the same thing, where I have a market watch, and I'll go to my buy list. And I have my favorite indicators that I look for. So I might look for a stock that has multiple of these hits. Facebook, oh, of course, I already got Facebook. Pindaloo. All right, let's look at Pindaloo here. I already showed it to you, but it's breaking out here. Here's the weekly, nice flag. So I use Market Watch and I use Radar Screen during the day to help drive me to decision making. On that note, I'm going to say goodbye. Have a safe and healthy week. Barring surprises from the hurricane, I'll be back next week. And those in Florida and up the East Coast, stay safe, because I think our hurricane's going to just whip its way all the way up until the Northeast. Goodbye, everybody.